Have you ever looked into trading with Plus500 and wondered whether they actually charge you trading fees? It's a fair question because when you hear commission-free trading, it almost sounds too good to be true. Let's break it down so you know exactly what you're dealing with. First, the headline point. Plus500 does not charge traditional trading commissions. That means when you open or close a position, you don't pay a fixed dollar fee or a percentage of the trade like you might with some other brokers. On the surface, that makes trading feel free, but in reality, there are still costs involved. Here's where the spread comes in. The spread is simply the difference between the buy price and the sell price of a financial instrument. This is how Plus500 makes its money on trades. Every time you open a position, you're effectively paying that spread. The size of the spread depends on what you're trading. Major currency pairs or large cap stocks usually come with tighter spreads, while more volatile or less liquid assets tend to carry wider ones. Another cost to be aware of is the overnight funding fee, sometimes called a swap or rollover. If you keep a leveraged position open past the end of the trading day, you'll be charged, or in some cases credited, a small fee that reflects the cost of holding that position overnight. This can add up if you keep trades open for longer periods. There are also some non-trading fees that don't appear on the surface but are good to know about. For example, Plus500 charges an inactivity fee if your account sits idle for a certain number of months. They may also apply currency conversion fees if you're trading assets in a currency different from your account's base currency. So does Plus500 charge trading fees? Not in the classic sense. There's no commission line item on your statement. But the cost of trading is built into the spread, plus any potential overnight and non-trading fees. The important thing is understanding how these costs work so you can factor them into your strategy. The bottom line is this: Plus500's no-commission model makes trading accessible and simple to follow, but like any broker, it still has ways of recovering its costs. Before jumping in, take a close look at the spreads for the instruments you plan to trade and consider whether you're holding positions overnight. That awareness can make the difference between a smooth trading experience and some unexpected surprises. Well, that's all for this video. I hope you found this video helpful. And if you did, make sure you give this video a super thanks by clicking on the heart icon to help support the channel, and don't forget to hit the subscribe button. We'll see you in the next one.